Investing can seem intimidating, especially if you're just starting out. But index funds make it easy to build a diversified portfolio without having to pick individual stocks. In this video, we'll cover the 3 best index funds that are perfect for beginners in 2024. What are index funds? Before we get into the specific funds, let's quickly go over what an index fund is. An index fund is a type of mutual fund or ETF that holds all of the stocks or bonds in a particular market index like the S&P 500. Since index funds simply track an index rather than trying to beat the market, they tend to have very low costs and fees compared to actively managed funds. The main advantages of index funds are low costs, broad diversification, and the ability to match the overall market's performance. With that said, let's look at the top 3 index fund picks for beginners this year. Number 1, Vanguard Total Stock Market Index Fund, VTSAX. The Vanguard Total Stock Market Index Fund is a fantastic core holding for any portfolio. It seeks to track the performance of the entire US stock market across small, mid, and large cap stocks. This provides complete exposure to nearly every publicly traded company in the United States. With over 4,000 stocks in its portfolio, VTSAX offers exceptional diversification. And with an expense ratio of just 0.03%, it's one of the cheapest index funds on the market. Minimum investment for this fund is $3,000. For beginners, VTSAX can form the basis of a simple but effective investment strategy. By holding just this one fund, you can get exposure to the total US stock market in a low-cost, hands-off way. Number 2, Vanguard Total International Stock Index Fund, VTIAX. While VTSAX covers US stocks, the Vanguard Total International Stock Index Fund provides broad exposure to stocks in developed and emerging international markets. This allows investors to diversify outside of just US companies. VTIAX holds over 7,700 stocks from countries all around the world, giving you a stake in the global economy. It has an expense ratio of 0.11%, which is still quite low. The minimum investment is also $3,000. Many financial advisors recommend holding both US and international stocks, often with a higher allocation to US markets. By combining VTSAX and VTIAX, beginners can build a simple but well-diversified portfolio of stocks from around the world. Number 3, Vanguard Total Bond Market Index Fund, VBTLX. While stocks should make up the core of most people's portfolios, bonds play an important role too by providing diversification and reducing overall volatility. The Vanguard Total Bond Market Index Fund gives you exposure to the entire US investment-grade bond market. VBTLX holds over 9,000 different bonds including government, corporate, and municipal issues with an average duration around 6 years. Its expense ratio is a rock-bottom 0.035%. Adding some bond exposure to a stock-heavy portfolio can help smooth out the ups and downs and provide income. For beginners, a simple 3-fund portfolio of VTSAX, VTIAX, and VBTLX can provide broad diversification across stocks and bonds in one easy-to-manage solution. Why choose index funds? So why are index funds such a great choice, especially for beginners? First and foremost, their low costs are a huge advantage over time. Excessive fees can really eat into your returns, so paying as little as possible is key. Index funds also take the guesswork out of investing. Rather than trying to pick winning stocks or funds, you can simply buy the entire market and match its performance minus small fees. Additionally, index funds provide exceptional diversification. By holding thousands of stocks or bonds, you minimize company-specific risk. This broad diversification helps smooth out the inevitable ups and downs. Finally, index funds are about as hands-off as you can get. Once you've chosen your funds and allocated money to them, there's very little need for monitoring or making changes. This makes index funds ideal for beginners or anyone wanting a simple, stress-free way to invest. Putting it into practice. Now that you know the top index fund picks for 2024, how do you actually get started? The first step is opening an account with a brokerage firm that offers these Vanguard index funds. Vanguard itself is a great choice, but you can also buy their funds through brokers like Fidelity or Charles Schwab. Once you've funded your account, you can purchase shares of VTSAX, VTIAX, and/or VBTLX based on your desired asset allocation. A common recommendation is around 60% VTSAX, 30% VTIAX, and 10% VBTLX for a stock-heavy portfolio, but you can adjust based on your risk tolerance. The beauty is you can start with as little or as much as you want and add money over time through recurring contributions. You can even set up automatic investments on a schedule that works for you. Index funds make investing simple, low cost, and effective. By following this 3-fund strategy for beginners, you can build a well-diversified portfolio tailored to your needs while keeping fees to an absolute minimum. Get started now, stick with your plan, and you'll be well on your way to long-term investing success.